support and resistance are a pretty basic concept. Now, tonight's class is not about how to, now we'll talk about it briefly, but it's really not about support and resistance. It's about how to build a strategy with support and resistance. Now, there are many, many ways to find support and resistance levels. I personally believe in eyeballing. That means looking at historic price action to identify areas where price has reacted or had a difficult time climbing above or falling below a specific price. Okay. I like eyeballing because it makes you work with your charts and makes you work with price action. But there are many ways to identify support and resistance. Okay. You can identify swing lows and swing highs of a trend line. Okay. So as the market moves lower and then bounces higher, it creates support. As the market moves higher and then rotates lower, it creates resistance. And these lines of support and resistance also reverse as price comes near each one of these levels. But you can also get support and resistance off of chart formations. The horizontal and the angular lines forming a triangle would give you resistance and support. Moving averages can give you support and resistance. Trend lines can give you support and resistance. But tonight we're going to be talking about the horizontal lines that you draw on a chart. So resistance are areas where price found difficulty to cross upward in the past. So as you can see here, they're pretty easy to identify when we're doing eyeballing. Now, I like using longer term charts to identify these prices where price had difficulty in the past. Now, eyeballing is not that difficult. It's just a little bit more time consuming. Okay, but it makes you work with your chart. So resistance is the level where price finds it hard to break through to rise above it and until it fails and is pushed back down. You should always suspect a reversal at a support or resistance level. Now, let's go over the chart and let's see how we're going to put these lines of support and resistance on our charts. Because before you can start implementing the strategy, you have to get the lines and the information on your chart. So this is my euro chart. We're looking at a 30-minute chart for the euro. This is a current live chart. Now you see all these lines coming across? They are support and resistance lines or levels I already drew on the charts. And I color code my levels based on the time frame in which I found them. Okay, so we can use, and the easiest way to do this is, see, what we do is we look at a 30-minute chart and we try to isolate. Now, the only thing that's important to us are zones that are close over where the price is trading. And you'll see as we go back, that there are other zones above and below, and you'll see them lined up, but the only price that's important is around where price is currently today or at this moment. Okay. So the first thing I did is I dropped on my red lines, which the red lines are my shortest term time frame. So these are levels of support and resistance I found on a 30-minute chart. They're either significant closes or significant opens or significant swing highs or swing lows on a candle, where I found that price had been instrumental, like you see here. See how price was falling below, rallied to this price and stayed on this, and then bounced above. This made us a fairly good area of support. But this is only one time. But if we go back historically, we found that same price here. We find that same price having importance here. So this allows us to draw a level of support, which could be support or resistance if price fell below. Now, the reason I color code it with red, or whatever color you want, is I want to understand that this is a short-term time frame. This is not something I came back from a long time ago. This is a short-term support and resistance line. Okay. So also when I drew one on here, From here, I go back to a 1 hour or 2 hour chart to look for more, because what I'm doing is I'm moving farther and farther away from price. You can see old lines, these yellows and gold lines up above, that I drew a long time ago when price was trading here about the 112 area. It's not going to help us today because today price is all the way down here. But now I can identify other levels over longer term time frames that have also been important. So you still see my red lines, and then I also draw on here brown lines. Then I go from here farther out to a 1-day chart and identify more levels where prices had significant difficulty. So you can see my yellow lines here. Okay. Now, all of these were in the past, but I need a support and resistance lines continue and continue into the future. The validity is how long they have held, when we found them, and how we found them. But now when I go back to my 30-minute chart, okay, I now see all of these levels, but I can interpret how valuable. So we can have major resistance and minor resistance, major support and minor support. Okay, and then we can have long-term support and resistance. And the more that these zones have held, okay, now this is a funny little line here, but this brown line here, okay, which is a historical line from way back when, look how important it was just a few hours ago. Look at what happened here when price got down here. That support line has held price above that. Okay. And that's a long-term support line. Look at this level here, how significant it was when we drew it from way back a couple of months ago and forward. Look at how that held going on here. Okay. So now we've got these drawn on our lines. Okay. You don't have to color code them, or you could use your own color code system. You pick however you'd like to do it. We just need to get our levels of support and resistance on our chart. Now remember, 6 months from now or 3 months from now, when price is back in this range again, those levels will hold. Or when price moves, eventually it'll move back up to these levels. Okay, those support and resistance levels are valid. Technically, when you've drawn them all across your whole charts, you can just leave them forever. Okay, you don't have to keep redrawing them and erasing them. They just stay on your charts, because when price moves back up this way, they will be valid again. So you can actually see where they were drawn from quite some time ago. Okay. And these old lines also go back, because once a price has become significant, it's always significant. Now, how long ago it was significant is also important. But once you have these on our charts, okay, we can start incorporating them into our strategy. So that wasn't so difficult. It wasn't so time consuming. It took me maybe 10 minutes to draw these lines on before class. Okay, because there's no accuracy level. You'll find that drawing support and resistance lines by eyeballing. Now, there's some people have rules with swing highs and swing lows. There's all types of rules out there. All I ever look for are price levels that historically, whether it be yesterday, last week, last month, had a significant weight on price. And then I look for it to have more moving forward. I'm not going to isolate one time frame like here and say that's important. I need to see that price being important back in longer terms. So look at the yellow line. Even when we go back, look at this one little weird way, or this red line. Look how important it was, back here. So you want to see how valid those lines were. But once you have them on your chart, you got it. So let's go back over and see what we can do with these now that we have them. Okay, so now that we know the role of the support and resistance lines, and which from now we can call zones, that's because support and resistance are not a given line. Okay, we draw these lines, but they're ranges. So let's call them zones. So if so, it would be super easy for traders to know exactly what every trader on the planet would do and have an entry order at that specific price. So as you see, we eyeballed these. Okay, I didn't go back and measure, was this, is this exactly 113.08 or was this 111.12? I see a level where price is important, whether it's 1 pip up, 1 pip down. It's not important. All I'm doing is getting these levels. Now, they are more like zones that can be reached and pushed into. The trend may pull the price action back out of it, or maybe price action will succeed in breaking it for good. This is why we want to think of these points as zones. Okay? You can have, this is not like trend lines where you can't violate a trend line and it's, if it does, it's over and done with. These are just levels. And I think even better than zones. They are, and that's why I call this price levels. These are significant price levels that, if as in price action. So this support and resistance zone strategy will enable you to take trades exactly at the area price will reverse. Trading support and resistance lines are critical for every trader to implement into their trading system. So I'm going to guide you every step of the way. So follow along while we cover support and resistance trading. After you learn the strategy, you will be able to identify these sweet spots where price action happens. So our indicators for this strategy will be price action and its relationship to support and resistance. To be honest, this is, in my opinion, the best way to trade support and resistance. So what exactly are these key areas? How to trade support and resistance. Before we explain the strategy, we're going to define support and resistance, and we did. So let's go. You ready? The first step for the support and resistance zone strategy. The first step of the strategy is drawing the zones on our charts. This allows us to easily spot where price would probably reverse. After you do this, it will resemble a support and resistance indicator. Only you now have zones to take advantage of because these are unique to you. This is based on your effort, your experience, your feeling. Okay, it's one of the few strategies that allows you to actually use your own intuition and your own gut. I look at price and my eyeball tells me this. So as you can see on this chart, here we have support. We see how it crossed, but here we have it exact. Here we have the tails of break it. Here the swing low held it. We know that this price has some significant meaning. This level is a very important level. Okay. Here we had a spike and a high. Okay. It came up to that level. Here we had a dip down to lows. Now we see the closes weren't exactly on this line, but we saw the price, the closes were above, the spikes were below, the shadows. Here again, we came up to this price. The closes couldn't close above, even though we got the spike and the high above, it still couldn't break that. So we know that these are valid lines or valid zones or valid levels. So drawing zones on a chart is better done on a higher time frame so that we can examine the main reversal levels and the more crucial points on the chart as the higher time frame shows us the bigger picture. So as we did, we used the 1-day chart, then we came down to drew them on the 1-day chart to the 2-hour chart to the half-hour chart. Each one of these giving us a better view of the overall picture. Why? When you are doing support and resistance trading, a line with multiple touches is far better off as it stood against the price and passed the test many times, and it will continue to do so. Why? Because history always repeats itself, and it continues to happen time and time again on every chart you will ever look at. So one of my tips is make sure you leave space between zones, as drawing many lines will confuse and worsen your trading decision. It might give you too many lines, and then you're more or less just guessing. You want to find lines, zones, or levels that have strategically been important in the past many times over. Now, this strategy could easily be compared to our red zone strategy that shows you how to draw zones on your chart. When you take a look back after drawing zones, you'll find that those lines withheld the price numerous times before and will continue to do so numerous times more. So once we've got the zones isolated, we've gotten the unimportant ones, or what we call minor ones, off the chart. We come to step 2. The second step to identifying support and resistance zones. The second step is waiting for price action to touch the zone. What you can do is set your charts on 2 or 4 currencies and wait for your chance, as it may take some time for the price to reach the support and resistance levels. This is why we say 2 to 4 currencies, is because it's a good number of pairs to be looking at and will not overwhelm you. This allows you to be a good judge on your trade, because it doesn't always move to support and resistance. You have to wait. It's not a matter of just, oh, there's a trade. You need to wait for the price to reach these significant or major zones. You don't want to force the action. Okay? Basically, you want the strictest set of rules possible. So basically, the higher time frames take less time and attention than the smaller time frames. Alternatively, the smaller time frames has more signals, as the zones may get hit more frequently. You have to be more focused if you're trading small time zones. But since we're CFD traders, we're only trading in small time zones. In this chart, we see the price action approaching support and actually almost touches support. So we wait to see the form and the shape of the next candle. So you have price came down, down, we waited. The low touched our support line. Now, we can't make a decision at this point. We want to wait for the formation of the next candle, and we want to see the shape of that candle, because we don't want indecision candles. We have to see what the market is doing. If the price reverses, that will be good, as it's what we were expecting. We will need to see a strong reversal candle, though, to assure that the price will reverse and will not just collapse back down again. So this is why we don't want to see a small body candle. We don't want to see an indecision candle. We want to see a strong candle where price is bouncing off of that support line. On the other hand, if it breaks that level, it may be really breaking or fake breaking. We also should stop to see a strong piercing candle that effortlessly breaks the level to assure that it will continue the same way. So if it breaks through that, then we would like to see a candle with a long piercing candle that pierces right through that level. Okay. So we're waiting for that new candle after prices touch that support zone to make a decision. So step 3 of the strategy is, the third step of this trading strategy is to wait for the candle which hits the zone to close. This will indicate that the single candle we are waiting for. Look at the candlestick pattern and ask yourself, is it a bullish or a bearish candle? Is it strong or weak? Is it big or small? Does it have long wicks and short wicks, or no wicks at all? We're asking this of the candle who touches the support line. Now, what we got was the candlestick that touched the support line was a strong bullish candle. But see what it came after? Was the candle that first came down to that support line. This bullish candle, which is the next formation, is telling us it is bouncing off of that support line and should continue its up pattern. Now, we don't know how far up, but this gave us enough that we could have gotten a nice little trade in, but it didn't sustain it for a very long time. But it stayed above that support level, so we could have ridden this in and stayed into this move until that, because we stay in until it comes back to that support level or comes up until the next resistance level. So the question to ask is it a bullish or bearish candle? Is it strong or weak? Does it have long wicks or small wicks or no wicks at all? When you can identify the kind of candle, then you will be able to decipher whether or decide whether you want to sell short or buy long. Knowing the type of candle is crucial to identify whether the entry is valid or not. So what do we have? We have price touching the support line. We have the formation of the next candle, and this is clearly a bullish candle. So we have identified that candlestick. In the chart example, we see how support rejected the price and pushed back up. We also see the candle that formed afterwards to signal the end of the downtrend movement and begin the upward movement. So how do we know how strong it is and what is the secret? Before we go any farther, here are some important factors in determining a strong candle, because spotting the specific candle on zones makes it the difference between a winning trade and a losing trade. So again, we want to look for that strong bullish candle or a strong bearish candle, one that breaks through that support and turns into resistance and shows that downward trend is going to continue, or one that bounces off and shows us that we definitely have the momentum on the upside. So the qualities of a strong candle are a long body, formed after the previous candle touched the level but could not break it, and it's highly taken the two previous candles. Taken out the two previous candles. So the new candle was larger than the bodies of the two previous candles. So this example shows us how strong a candle should look. Excuse me. So as you can see, the strong candle overpowers the ones before. So here we see it moving up, and this is a strong bearish candle. Comes up to resistance, the blue candle, touch it, unable to make it, then we get a very strong bearish candle afterwards that engulfs or encompasses the entire previous candle. So here you can see that these weak candles were not able to breach resistance lines and had long wicks and could not break that level. So we would wait to see if we will still have the next candle. Will the price break that level, or will the resistance win and price reverse? So here we see price held in support. Otherwise, on the opposite end, we came to resistance. We see weak resistance, and price is not able to break through that resistance line and falls back. So we have just the opposite of each other. So on the first case, the candle on the left that we marked for you, clearly the price fell on the next candle, which made it a valid reversal. In example 2, while in the second case, the candle on the right that we marked, we had a very small candle, which did not mean anything except that resistance stalled the price for a while. We don't want to make any decisions at all when we see a small candle. Then step 4, the fourth step of the support and resistance strategy after you analyze your zones is identify. The fourth step is to identify where you will enter a trade. You want this to happen at the pivot point or the turning point. So here are the entry criteria. Entry and exit criteria for this support and resistance trading strategy are: you will enter, your entry should be slightly above or below the signal candle, which is the strong candle. This way you will be adding more confirmation to your trade to make sure that your price will move towards the direction you expected it to move. But you always have to wait for that second candle, and not too many people jump in here when they see the candle forming in a bullish or bearish position. But remember, a candle as it's forming could be showing bullish, but the end of close could be bearish. So you have to wait till the second candle is completely formed. Okay. And then our stop loss should be placed on the other side of the zone and not too close to the level to give you some space. As we said, it is a zone. Putting the stop loss there makes sense because this is the end of the trade. The price is unlikely will reverse after that point. So according to the rules of this strategy, below is an example. Okay. We want to use a 2-to-1 or a 3-to-1 take profit and loss ratio. Okay. We would put our stop below that candle, which was our entry candle, and using a 2-to-1, we would need the price to be able to move up to this price to get our risk reward ratio and a 3-to-1 ratio. Okay. So this would help us then calculate whether we could take this trade. So let's review. The support and resistance zones strategy will enable you to take trades exactly at the area where price will reverse. Trading support and resistance lines is critical for every trader to implement into their system. Our indicator for the strategy will be price action and the relationship to the support and resistance. To be honest, this is, in our opinion, the best way to trade support and resistance. So what exactly are these key areas and how do you trade support and resistance levels? So before we explain the strategy, we're going to define the support and resistance which we have. So what we want to do is first we want to draw the zones on our charts so that we can easily spot them. 2 is the important part, is the waiting. Wait for the price action to touch the zones so that we do so that we can set this on 2 to 4 charts. Once we've drawn them on, we can just see how price is trading and wait for it to approach that major support or resistance zone. Then we want to wait for the candle which hit the zone to close, as it will probably be the signal candle. We're waiting to look at that candle. Then 4, we want to identify where you will enter the trade and the entry criteria. And then lastly, we want our exit strategy, which is your entry should be slightly above or below the signal candle, which is the strong candle, whether it's a bullish or bearish move. And this way you're adding more confirmation to your trade to make sure that the price will move towards the direction you expect it to move. So that's kind of a wrap. So let's go over it and put it together in a package. Now that you've learned from the support and resistance strategy how to draw the zones and how to trade them successfully, you also learn how to determine the direction that the price will probably move to. Remember that word I just used, probably. So we can have a better edge in our trading. Trading support and resistance and discovering support and resistance zones are pivotal to your trading success. And you'll find that support and resistance trading, I use support and resistance and chart patterns, and that's basically all I use in making any trading decisions. I don't overcomplicate any of it. Because price action is ultimately your determining factor. So support and resistance trading is one of the best ways that you can trade. You just have to learn how to identify these levels and then how to sit tight and not jump into trades because you see it hitting a minor support. And you have to wait for those major support and resistance zones, the ones that are significant. And this is a matter of you taking the edge. Okay? And the best way you're going to do that is just start drawing these lines on your charts. Wait till you see them, and you'll be able to see eventually how you determine what are important ones and what are not important ones. So thank you very much for joining us tonight. And again, please click on the download buttons and download the Introduction to Technical Analysis. That'll explain to you also more in detail support and resistance zones and the different ways you can get them. Then download our support and resistance indicator guide. That's going to go over all the ways that you can get them. And then lastly, download that video I gave you on the simple support and resistance strategy. Trading online, including Forex, cryptocurrency, CFDs, and more. Please make sure you click below to subscribe, to like, and to comment on my videos. It's very important. So thank you very much, and watch all of the Barry Norman YouTube videos. Thanks.